Hello folks, this is Naeem Aslam, Chief Markets Analyst at AvaTrade, and happy Friday to you folks, because in the markets we are seeing immense amount of a sell-off and a lot of panic, less optimism, more pessimism. That is what we are already seeing in this US equity market futures. And this coronavirus stock market rally has come under threat, as we have mentioned in our previous videos, as we've discussed that the Dow Jones Industrial Average was coming very close to its all-time high, a level that was going to trigger a sell-off, which we previously warned about. Why? Because the price, as you can see in the chart, the Dow Jones price was trading well above its 50-day simple moving average. So when the price trades this much away from its 50-day simple moving average, a retracement is pretty much imminent, and that is what happened for the US equity markets. We saw the Dow Jones index selling to the downside, but it wasn't the Dow. As you can see in the chart, it was the Nasdaq index which led the losses for the coronavirus stock market rally. The index was down well over 5% yesterday, folks. That is the biggest sell-off for the Nasdaq since June. Now, the stocks like Apple, Amazon, Facebook, Tesla, Microsoft, also massive sell-off to the downside. In fact, the plunge for some of these stocks was so huge, especially with respect to Apple, that we didn't see a one-day sell-off this intense since going back all the way to March. Now, of course, there were concerns among investors, and there are still concerns among investors whether this sell-off has something to do, something bigger that we all are not aware of. But by looking at the market fundamentals, looking at the price action, it doesn't appear there was anything more than except the profit taking strategy, which traders do that when the prices are well away from the mean, and then they think this is a better time for them to do that. But today, it isn't about profit taking. It is Friday, and that means US non-farm payroll first, because this is the first Friday of the month, and usually always on the first Friday of the month we get the US non-farm payroll. The data we have seen so far for the US economy indicates that today's number will show us that a gradual recovery is in place. The most intriguing element for me with respect to the US unemployment number is how the US unemployment rate is anticipated to fall to a single-digit number, folks. That is a remarkable thing, or that is a remarkable recovery that we have seen, because this unemployment rate was certainly in a double digit last month. The number was at 10.2%. Now it is expected to fall to 9.8%, a big improvement for the unemployment, especially where it is coming from, when the unemployment number was well above the 13% mark. Now, in terms of commodities, it is all about the dollar index and how that dollar index will react to the US NFP data. So keep an eye on that, and I'll see you guys next week.